Hi, everyone. I'm Christine Kopr with Sotheby's Realty in Vancouver, BC. Welcome to my monthly update. We are taking a look at the October stats and what has happened in the market, including some news updates. Okay, let's get started. As always, I like to share certain stats, and we're going to get right into that here. So here are your stats for the Real Estate Board of Greater Vancouver for October 2022. Now, as you know, every month I like to go through this report. This gives you the overall look of what's happening in the current marketplace. It's like looking at the Toronto Venture Exchange or Stock Exchange, and then you need to get into your individual stocks or sectors to see exactly what's going on for your specific location and product type. For that information, make sure to reach out to me. I have plenty of resources for you, and I'd love to have the opportunity to connect and tell you what's going on in your market, whether you're thinking about buying or selling today. So in October, we reported 1,903 sales. That is up 12.8% month over month. So we had a stronger October over September, but down 45% year over year. So a year ago, we saw almost 50% more sales. And today's sales at 1,900 are also 33% below the 10-year average. Just to give you an idea how to put this into context in terms of market conditions, we are going through a current correction. New listings, this is one of our key indicators besides interest rate, consumer confidence, etc. But new listings are something to watch. 4,033 new listings came on the market in October. That's down almost 5% month over month, and about the same year over year in terms of the amount of homes that were listed in the month of October. Now, active listings, this is the key. How many homes are available to buy on our real estate board right now? And that's 9,852 active listings. That's down 1.2% month over month and up almost 23% year over year. So slowly but surely, we are starting to see some accumulation. We did have some higher accumulation earlier on in the spring. However, we did have a higher sales volume to absorb that amount of inventory. The thing that we need to watch is with the slower activity in the marketplace is, although not a lot of listings come on, if they start to accumulate and we start to accumulate a lot of inventory despite the current amount of sales activity, we could really have a lot more downward pressure on pricing. So inventory is the key number to be watching here. The great news is, and I'm going to show you in another slide, is we are at really historic lows in inventory. And despite the fact that we have had some price depreciation in the last 6 months, we are seeing somewhat stable price or slower price decreases than we could expect to see if we had heavy inventory come on the market like we did back in 2008, 2009. So something to keep our eyes on. Now, every month I like to look at months of inventory. This is the key number for me. It is a trend. 1 month doesn't make a market. We need to see what happens consistently. Now, a balanced market is between 4 and 6 months of inventory, between 4 and 6. Below 4 months of inventory is considered a seller's market. That means there's just not a lot of inventory for the amount of demand that's in that marketplace at that time. Over 6 months of inventory is considered a buyer's market. It means that there's more inventory than there is demand. And as you have more inventory than there is demand, we start to see downward pressure on prices. We are currently sitting at 5.2%, which is slightly lower than September. So it's down 12% month over month, but it is up 126% year over year, up from 2.3 months of inventory last year. So at this time last year, we were only at 2.3 months of inventory. That was next to nothing. Now we're sitting at 5.2. You would consider this balanced market conditions. However, we are in a trend that's moving towards the buyer's market, and we are feeling that on the street. It's more buyer's market conditions overall, not all segments exactly. However, the overall trend is there. So this is a number that we do watch, and as we go through some of these slides, you'll see what we've seen in the past and how that correlates with prices. One of the visual cues I have in here is yellow pricing means upward trend, red pricing means downward trend. So the benchmark price, which is our index to give you a price approximately of the average home in Vancouver, is at 1.148. 1.148. That's down 0.6% month over month, so it's about flat, and it's still up 2.1% year over year. However, it is down 9.2% in the last 6 months. So we're giving away a lot of the gains that we've seen over the last year. However, we are still up slightly over last year's pricing, and that may change as we move into the fall and into Q1 of 2023. Now, as you can see, the benchmark price peaked here in April at 1.374, and we're now down at 1.148. The reason why I think it's important to take a look at where we are today is I can't predict the future for you. However, we can take a look at the past and see what's happened in the past. And here is what 2021 looked like. We had very, very low months of inventory, well below that 4 months of inventory. And that really, really put upward pressure on pricing. It was very aggressive. Plus, we had extremely low interest rates. And so you can see here, we had a whole year of price appreciation for the first quarter of this year, all of last year, all of 2020. Who would have thunk? Pretty amazing considering we had COVID hit us here right in April, March, and you can see that quick blip into buyer's market territory, and very quickly we recovered. So you can see we've been in very, very low inventory conditions for the exceptional demand that we had over the last couple of years, partly due to low interest rates, but also partly due to the amount of inventory. And all the way looking back to 2019 and 2018, and I like to always refer back to January of 2018, because that's when the stress test was introduced into the marketplace. And the stress test is kind of like what we're seeing right now in the sense that we're seeing very aggressive interest rate increases. In fact, it's been about 3.5% or so that we've seen just since the beginning of this year. And January 2018, although interest rates weren't increased, the stress test artificially increased them by introducing the stress test, which was 2 percentage points higher than the rate that you were getting effectively. So what we saw after that was a very similar situation. It took some months for that to filter through the marketplace. If you're looking here at 2018 down to January, and you can see it took a few months for that change to start being felt in the marketplace, and we slowly started accumulating inventory, so that months of inventory was over 6, and you could see that price reduction over time, that price depreciation from that elevated inventory due to the lower demand. And you can see the sales here, very similar to what we're experiencing today. So currently we are in lower sales than we're used to seeing over the last couple of years. However, it doesn't mean that no homes are selling. So the big thing is the interest rates, as you can see in 2020, and actually coming out of 2019, we started to see our inventory started to tighten up here, and interest rates started to actually start to lower back in 2019. And that really fed in as these interest rates went down, the market really started to speed up in terms of price appreciation. But now, as of 2022, we have seen one of the fastest interest rate increases. It's the second fastest compared to the 90s, which was the other rapid increase in interest rate in the marketplace. So here we are, where we are today in terms of interest rates. It is a very different situation from even earlier this year, where some buyers were able to get interest rates closer to 2% or less. And that is something to take into consideration if you're thinking about selling your property today, the affordability for the current buyers. But part of this also has impacted rents. As you can see here, rents have skyrocketed just in the last few months, as unfortunately, many would-be buyers have been taken out of home ownership and put back into the rental pool, and a lot of demand has been put onto the rental market. COVID has also passed. As you can see, we had some dips in the rental rates, and that is totally coming back now. So anyone as an investor out there or holding property, rental rates are very strong right now. And this is just a quick look of our region for BC, just to see what's going on. This is the average price. This is not by price in terms of dollars, but in terms of just changes over time. As you can see here, we've been pretty stable. We've had a little bit of a correction. Some locations have had a little bit steeper appreciation. New listings, again, Vancouver or the lower mainland is not seeing that influx of listings coming on the marketplace, and total active listings as well. They've grown from the beginning of the year, so we have had an increase. However, I want to show you where we're at in terms of historic inventory, because that is very important. So in terms of inventory, here is a graph. We've got our max graph going back to 2005 in terms of our total inventory. One of the good things that is happening in our marketplace right now is we still have lower inventory. While we have lower sales, we still have lower inventory historically. And here's a really good example. Here's where we're at for October 2022 compared to what we saw in the major market correction of 2007 to 2008 heading into 2009 when we had the global financial crisis. So keeping an eye on the total inventory is very important. We are in historic lows still, and this can help stabilize things as we move forward. Now, let's take a look at our detached, attached, and townhome data. These are the numbers for the Real Estate Board of Greater Vancouver for October 2022. You can see our new listings that came on the market. This is all listings for the board. 4,033 came on in October, so it's a downward trend from the beginning of the year. Sales to actives ratio, currently for all property types, we're sitting at 19%, so just entering a balanced market territory. As you can see, that's coming off the top here at 57%. This is all types included, so detached townhomes and apartments. And you can see that detached homes are just on the precipice of a balanced buyer's market. Townhomes at 22%, so still on the cusp of a seller's market, and apartments just on the other side of a seller's market with 22% and above being a seller's market. But if we take a look at our pricing, so your average price for a detached home in Greater Vancouver is now 1.892, and we're at 14.3% for your sales and actives ratio, so that's putting it just on the cusp of a balance going into buyer's market. And that 1.892 is down from our peak at 2.139. So in the last 6 months, we're down just under 12% from the beginning of the year, still up year over year. Townhomes sitting at 21% or almost 22%, so right at the cusp of between a buyer's and seller's market for sales to actives ratio, which is the absorption rate. Benchmark price is $1,043,000 off the peak from 1,150 back in April. We've taken about 10% decrease in the last 6 months in terms of pricing and still up year over year. Apartment condos sitting at 23%, so still sitting in what we would consider a seller's market, but going over to the buyer's market. Benchmark price is $727, down from $844 earlier this year, down about 14% in the last 6 months. So in summary, we're more heading into balance / more buyer's market trends for your different property types. Each location, Vancouver East versus Vancouver West, condos versus townhomes, they're all performing slightly differently. So make sure you reach out to us and we can give you a specific market update for your product type. That's a bit of a wrap up in terms of October stats and where we're at today and what to look out for in the future. A couple of other things that have happened since October is we did have another interest rate increase. So the Bank of Canada increased interest rates by 50 basis points. It was actually a bit of a surprise. The market was expecting a 75 basis point increase and they only came up 50 basis points, which is a little bit of a shift. They're starting to pay attention. There are some concerns of a future recession. However, inflation is still sitting at 6.8%. So we're not there yet. And the Bank of Canada has been very strong about their words that we're going to continue to see future increases. Let's see what happens December. I'm pretty much banking on another increase, but hopefully by the early spring, they're going to see things in the economy that are going to potentially give them some more reasons to slow it down and potentially stop the interest rate increases because they are really focusing on the housing market. And there's other structural issues that they will not be able to control with increasing interest rates. The US Fed did the same thing. In October, they raised by 0.75% as well. So it is a thing that's going on, and we'll see what happens early in the new year. If you do have a variable rate mortgage, please be prepared. You will see some further increases in your mortgage rate. Now, the other thing that's coming up is the ban on foreign buyers. This comes in January 1st. No one that is a foreigner is going to be able to purchase a property as of January 1st for 2 years. There are a lot of exceptions, so we do need to go through the list. We are still looking for some clarity on this, but if you have a PR or you have a job in Canada, there are some ways around this. So please reach out to me and we can point you in the right direction to get that information, especially if you're thinking of purchasing a property in the next 2 years and you're not a Canadian citizen or a permanent resident. The other major news that hit the headlines so far this month is an announcement from Ottawa to increase even more immigrants into the country. We're now expecting to have up to 500,000 people come into Canada by 2025. So this, of course, underpins the housing market. Not everybody comes here being able to afford a home. However, it does put support and pressure on the rental market. And it's a very interesting to watch our governments do their thing when you have the federal government bringing a lot of people in. And of course, we also have municipal and local governments struggling with housing. So that's my market wrap up for the month of October. I hope you found this valuable and I look forward to connecting with you, whether you're thinking about buying. It's a great time. We've seen prices come off from the peak. Now is your opportunity to negotiate. And of course, you can refinance in the next couple of years once interest rates come down. And if you're thinking about selling, now's the time to work with a very experienced team because marketing and strategy are going to be a need. We welcome the opportunity to speak with you. Thank you so much. I'm Christine Kopr with Sotheby's Realty in Vancouver, and I look forward to connecting. Be well.